Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Monday, President's Day, February 16th, 2026. We're getting on to 6:25 p.m. Central Time. So we did have abbreviated trading sessions in some markets today, not all. The ICE, for example, I didn't see the soft markets open. You didn't have the grains. You didn't have the meat markets open. But you were open in practically everything else in extremely subdued trading. That's what you typically get. Also, remember, this is Lunar Day week, so the lunar holiday is taking place all week in China. So you've got rather thin volume going on from that as well. So that takes out some of the gold buying and other parts that you'd normally see in some of these markets. Keep that in the back of your mind. In terms of news, the first thing before I bring up that page, and we'll come back here, is Iran and the U.S. will talk tomorrow. I personally think nothing's going to get done. Number one, to me, the president, our president, wants to get more military assets there. The Abraham Lincoln, I hear, is off Oman, so it's sitting there where it's in position with its strike force. The Gerald Ford is on its way. It left everywhere, and I'm guessing it'll be maybe this week that it arrives where it has to be. So what I expect is the U.S. will listen to say what its demands are. Iran will say yes to those demands with the caveats. If you think they're going to give up nuclear enrichment forever, I have my doubts. If you think they'll agree to lower grade uranium enrichment, maybe. They've already met with the members of the United Nations to set up a task force, but you know how that goes every time. They say, no, you can't look at it, you didn't give us time, blah, blah. They're masters at delay, and they're masters at saying yes, and then the devil's in the detail, and the details never work out. But again, they leave themselves all off ramps. So do I expect anything this week? I don't, but what you're getting is a bid into the energies because you never know what might happen. The worst that could happen is everybody walks out and there just cannot be a deal. And at that point, everything goes quiet and you know what could happen from there. Gold is saying that's not the case because it's not getting a bid off of that. That's how I'm reading it. So while this is up, I don't know why it should be up. In the currency markets, there's a bit of a bid that has come into the dollar. As I said, we were not open today in the soft markets. In terms of news tomorrow, let's get to the news. I've got one other page to go to. Here we are. And in the news, the New York Empire State Manufacturing Survey for February is going to come out at 7:30. For you soybean traders at 11, you're going to get the crush, the soybean crush. And the National Association of Home Builders at 9 in the morning will release their housing index. But this is the week that you're going to get other important reports. You're going to get ADP numbers. You're going to get the PCE index. That's one of the Fed's favorite tools. As you know, the market is thrown back in that there's now going to be rate cuts this year. I see 2 as their possibility, not mine. That's the CME Fed Watch page. A 10% chance of a third cut. So we'll see. It's all over the board, and it always is all over the board. Let's go back over here, if we could, to the chart action now. So in the charts, if you look at the S&P, this is the first time in a long time you're sitting at 68, 63, 75. The black is the price. The red is the value of the 18-day moving average of closes. And if you look up here, you can always see the high and low. So I've given a new way of looking at this. I think it's better for a lot of people. When we look, and this is the trading symbol for this, by the way, you've got a pattern where the swing line has lower highs and lower lows. Therefore, the market's in a downtrend. You filter what the swing line is doing with the relationship of price to the 18-day average. When it's under it, you say the market has downside bias. I teach this all in my charting course. You're not going to get it right here, but at least I'm making a hope to make sense for you. The first support line is the 100-day average. It often is. When you take a look at the market after that, the next support was the Bollinger Band, and you did get down to that, as you could see on Friday, and you're giving yourself the bounce now in the market and coming back up to the resistance of the green line, which is the 100-day average of closes, and momentum is down. So bias is down, Trend is down and momentum is pointing down. It's not very friendly. When you come to the NASDAQ, you've got the same situation to a degree. You've got the lower highs and the lower lows. The market is staying within the Bollinger Band. If it were to break here, I would look for major, that's spelled with a capital M, major support to come in at 24,356 to the Bollinger Band right through here at the 24,470 level. I'm not saying it has to go there, but that is where I'd look for the support in the market. The Dow is stronger than the other indices. 3 weeks ago, I would have been saying the Russell's right now the strongest. Now it's the Dow. You're getting these rotations in the market because of AI. AI, artificial intelligence, is a disruptor. And what it's doing is it's taking companies and making them rethink and making you rethink as an investor in them. Can they survive if AI can replace the paying for software, as an example? If it can do it and you can build it yourself by just talking to the AI system, it can be done without a lot of fanfare. So this is the disruptor that the market has. It's almost like the internet. Back in the 70s and 80s when it first came about, I hope you remember that. And I built my own computer. I'll never forget it. And just to do moving averages. And it saved a wealth of time. Well, this is that same thing again, now in the different version. You have the higher highs, higher lows. So I think the market's getting bought at 49,554. What I don't like is the risk to this low. And if you're going to risk to that low, it's more than I normally would tell a client of mine to risk. When you look at the Russell, you have a higher high and a lower low. There is no trend. So this is the market that was running beautifully, like I was saying, and it's lost that now. It needs to get caught up again in what can interest rates do. And it's a little surprising it's not doing better because the 10-year note did fall to 4.05% last week. And what we've got is the short-term interest rates continue to fall. In the DAX, it wasn't open today. You have higher lows, higher highs. You have momentum still pointing up, and it's over the 18-day average. However, if it gets under 46.81, there's a problem. You break this pattern. Then we get to the notes. And as you could see, you've got now a market that's got 1, 2, including today, 3 days over the upper band. Typically, you don't go more than 5. Okay, so we'll see if it can do that. And it's trying to lift these numbers as it does it to embed. This is all a sign first overbought, and then if it embeds where both these numbers lock in for several days or more over 80, the market takes on a new life and this becomes a base and the market tries to work higher. In the 5-year note, it's not as good as the other. You can see, yes, you have here, this big break is a lower low, then a higher high, and it keeps hitting the upper Bollinger Band and can't get through it. And the importance of the Bollinger Band is you only stay above or below it 5% of the time. In the dollar index, you're right up to the key numbers. The 18-day average, so the bias is down. Momentum is corrected in oversold condition and going sideways. If the market were to take out the lows of Friday, the market, in my opinion, would turn into a sell signal. It has to go where? From this pattern, it really can't afford to take out Friday's high. If it does, then the pattern extends and I can't get a buy signal out of it. In the euro, the market has given you your first move tonight back under the 18-day average of closes. It must clear Friday's highs to get something positive going while not taking out 118.51.5. And as you can see, the low is 118.61.5 up here. In the Japanese yen, I'm looking at how their GDP did for the fourth quarter. All the numbers came in today. And while it grew, it's slow growth. And this will get Prime Minister Takachi to want to go ahead with her plan. Remember, she just won a snap election where she wants to cut food taxes and wants to get public spending going. That's obviously not what the central bank wants. She would like, I believe, a lower yen. The bank wants a stable yen. There's a difference here. In Bitcoin, the market is just drifting here at the 69,000 level now. I said when it got under here, in fact, this whole way, be careful. You lost the bearish embedded reading, and before this is taken out, I wouldn't be surprised to see price in the 18-day average meet at some point here. But I think what's going to happen, it's the 18-day average that wants to fall, not prices going up. Obviously, tonight, this red line here, this arrow should come off because now you've just gone crazy with the market. So I don't see anything to do with that. In heating oil, you've come back over to the 18-day average. I'll have to just let that go through, folks. Sorry about it. I normally shut that off. Lower highs, lower lows, and the market looks to me as though we just want to back off a little bit here, still in the nat gas. You could see how it broke down today, and it's coming back up, trying to get itself back into more positive territory. For those of you that want to learn what I do, it's pretty simple. You go to our website, and we have a whole area there on my charting course, and I teach all these different parts. I teach it in a way that each chapter builds on the next chapter. They're video chapters. So they walk you through, and we give you the commentary. Let me go back. We give you the charting software so you could follow in that the exact days that we do things for the video examples. You're not left trying to surmise, oh, what do I do? You can go back and see all this, how it unfolds. Every morning at 6 a.m., I do a recording. At 11:30 to 12, I publish my written updates. I make them like a Reader's Digest. Easy to read, not meant to take your time, but I lead you into what I want. And with the videos, I get to really explain what the chart action is doing. I use window envelopes, slow stochastics, Bollinger Bands, moving averages. I put it all together, and as you're taking the course, I'm reinforcing what the course is all about. You get free access to our QT Market Center. So you, my phone, which just rang, that's where that's at. You can put it right there. So how do you get all this? Because it's all wrapped into a neat package that is not expensive. You visit iraepstein.com and you go to the courses. You can also, if you want, look at the research by going to the research center, iraepstein.com. You can click there, or you can click here if you're on YouTube. I'm Ira. You have a good day.